Boom. Alright, what's going on, you guys? It's Royce Jacob. Welcome back to the channel. In this video, we are going to be talking about ROOT stock, or Root Inc. You guys, I know this stock has been a bit slow lately, and it may seem strange that I'm so excited about it, especially in the case that it doesn't pan out in the way I think it will. But I am calling this the calm before the storm. I am personally anticipating a big move in the very near future. Which direction? I cannot say for a fact. I am a trader, not a sorcerer, but I'm sure you can tell by my tone that I think we are going to see some significant upside coming, and I will do my best to rationalize my thoughts as to why that is. Let's get into it. As always, we'll quickly go over the topics we'll be discussing, and then we'll dive into each one individually. In front of us is TradingView, where we'll talk technicals and price targets today on Root. Many of you guys know the pattern that is in front of us, but at the end of the video, you guys know the drill. We save the technicals and price targets for the end of the video. I will talk to you guys about where I think we could go once this pattern resolves itself, in the case, once again, that it does resolve itself in the way I believe it will. Keep in mind, you guys, before we go any further, this is just my opinion. I could be completely wrong, but always know that my money is where my mouth is, and I got a big old baggie of Root at this moment, okay? So, again, we will close it out on the charts on TradingView, but we first have two quick articles. Not really. The first one is not an article, but we are going to take a look, as you guys know, at Root's short interest ratio and short volume on MarketBeat. Okay, so we will take a look also at some of Root's fundamentals, I guess. But you guys know the reason we're excited about Root, and that is because there is a potential short squeeze present, okay? So we'll take a look, just recap on Root's current short volume, their short interest as opposed, relative, I should say, to their float. So we'll just kick it off with the short volume, just catch you guys up on that. That'll be super quick. But I also want to read over this quick article talking about Root's fundamentals, because as a company itself, Root does have promise, which in the wake of the short squeeze, which is, I want to make it very clear, the short squeeze is the main attraction here. The fact that it's seen such a significant correction since its IPO less than a year ago at this point, and the fact that it's an innovative company in itself. It's in the tech space. If there's a company that will survive a stock correction or an equity market correction, the SPY, the NASDAQ happen to fall, the Dow, it's going to be tech stocks, and it's going to be innovators. Okay, so just as a bounce play in itself, short squeeze aside, this is a promising play in my opinion, and it's just another star aligning in my bullish case for Root. Okay, so we'll read over this quickly again. Go over these, won't take too long, and then we'll dive into the charts. But I do want to kick the video off by reading the little excerpt on Root that I wrote this morning in the newsletter. Okay, so Root Inc. Finally, I get to be a bull about something, because above I was talking the S&P, the US dollar, Dixie, the Bitcoin, and unfortunately, you guys, if you've been tuning in, you would know I'm bearish. But again, I'm bullish on Root in a volatile market environment, in a greater equity market environment, I should say, where there's a strong dollar, there is fear, there's a September sussiness that's happening. Short squeezes thrive in the September sus. The double S is right there, okay? So short squeeze plays are very appealing to me at the moment, and Root is one of them. Just remind you guys there. I mean, I'm always a bull on something, I guess. In my current scenario, being a bull just requires having some bear paws on as well. I mean, Root is reaching the absolute apex of this descending triangle. Again, we'll get to that at the end. And as I said yesterday, and as evident by my irresponsible portfolio construction, I would say, you guys, it's been a while since I've used this phrase. But at this moment, I would say I'm irresponsibly bullish on Root. I think this second wave will be a tsunami. Okay, the resolution will come soon. Let's hope I'm on the right side of this trade. Once again, you guys, I'm bullish, as very evident by my tone once again. But keep in mind, you guys, it's the markets. You guys know this market. Anything can go down, okay? So before we do dive into all the Root stuff, I will ask you guys to please give the video a like if you do go on to gain value from it today, or if you're excited about Root like I am, or any short squeeze plays for that fact. Subscribe to the channel. If for some reason you're still not subscribed, make that red button gray. And of course, if you guys do want one of these bad boys in your email inbox every single trading day during market hours, along with a complete breakdown of my entire personal portfolio. You want to know exactly which call options I have on Root, all the other short squeezes, crypto plays, EV plays that I do update once again every single trading day during market hours, along with this email newsletter explaining my thoughts. This is what the newsletter looks like when it pops into your email inbox. And again, above this is a bunch of other analyses you can see this is for, and just the intro talking about my trades, rationalizing my trades once again. Okay, so first link down below, that is going to be $15 a month or $40 for every 3 months, completely up to you, but just know I do my best to make that worth your hard-earned money, so I appreciate it if you check that out. Also, Discord, the way I find a lot of these short squeeze plays, and very promising plays at that. Great community on Discord. You guys can use code YouTube25 to get $25 off the private link to the exclusive Discord. And yeah, that link is down below as well. Just throwing that out there. I appreciate you guys watching right now. Even if you don't check out the links, it's all good. Let's get into Root. Okay, so again, we'll close out on the chart today. Root actually looking good in after hours. Just before I recorded this video, check back on it. Looking sick. Okay, so short interest ratio and short volume, Root currently sitting at just about $6 per share. Short interest data. So Root's current short volume is 21.4 million shares. Previous short volume is 19 mil, so it's good that we're up fairly significantly. Change versus previous month, plus 12%. Outstanding shares, skip to the good stuff. Outstanding shares, there's 252 million outstanding shares. The float size, which is traded shares, is 62 million, which means that if there's 21 million currently shorted shares of 62 million of a 62M float, the short percent of the float is at about 35%, which is freaking amazing. Okay, that's why you guys know the initial reason I got stoked about Root was because I believed it to be the new SPRT or GREE. I'm seeing a two-wave coming, the tsunami coming. Again, we'll explain why that is after we go over a little bit of fundamentals. Just because I don't feel right just talking about the short interest on this, I gotta throw some fundamentals in there. Okay, so let's read over this, and then I'll talk to you guys about upside price targets, where I think this thing could go in the case that we take off. Wall Street usually loves a good disruptor, but it has been snubbing tech-powered auto insurance company Root since Root opened trading last October at $26. Okay, so keep this in mind, you guys. I mentioned this insane correction Root's seen since it IPO'd. It's not even been a year. It hasn't even been a full year yet, and Root has seen a 76% price decline. Okay, its stock price has steadily decreased. Shares are trading just over $6, at about $6 exactly, down 76% from where they debuted. Is this an opportunity for investors or a value trap? Okay, so the thing about when a stock is IPO'd, okay, and again, the market's been hot. IPO price, what is value anymore? But it's people who are competent investment bankers' jobs to price IPOs and price a company appropriately. So the fact that this thing was priced at $26 and in under a year, it's declined over 75% to trade at $6 right now. And again, this short interest definitely takes a toll on it. The shorts are depressing the stock, or keeping it down or pushing it down. It's a weight on the stock's shoulders. So that definitely does contribute to the downside, which again speaks to the raw potential of the short squeeze potential with this one. But again, just from a value perspective, from a pure bounce play perspective, kind of like I've been mentioning, there's definitely a good chance that, I mean, this thing just bounces just because it's been hammered so freaking hard and it's so significantly below its IPO price, where it was appropriately priced under a year ago. And the year-over-year metrics are still impressive. Not going to go over those now, but they're still pretty good. The digital insurance revolution. Insurance is one of the last business areas to face disruption by technology. It's dominated by a group of huge old companies, and people generally don't love the process of purchasing policies, nor are they usually thrilled with ones they get. Root wants to change that. This is not an ad for Root, I swear. It kind of is, I guess. I am definitely biased. I want this stock to blow up, to explode, but this is definitely not an ad. It will pay me though if it works like an ad. Traditional auto insurance pool data from large groups of drivers and stick each company. Okay, traditional auto insurers pool data from large groups of drivers and stick each customer into a category that determines the price of their policy. Those categories are broad and in most cases don't take individual driving behavior into account when calculating risk. For example, a member of a younger cohort would get charged a higher price than a member of an older cohort for identical coverage. Let's do that real quick because I don't know why that disappeared. Boom. That's how I highlight things. If you guys didn't know, get rid of that. Root changes that by using a telematic system to collect data about each individual policyholder's driving behavior, assessing the degree of risk that person brings to the table, and basing the price it charges them on the result. Okay, so again, you guys, this is a very innovative car company in this space. There are other players in this. If you guys have ever heard of like Lemonade or even I think Allstate and Progressive are starting to implement something like this, but Root does have somewhat of a first mover advantage. Its market cap is eons smaller than the names I just mentioned. And again, just in terms of a potential play from a again, just a balance perspective and a fundamental, what the company does perspective is definitely there as well. Strong signs of growth. In the second quarter, Root's direct written premiums, that is total premiums sold, increased by 24% year over year to 177 milli. And that metric has been growing nicely over time. So 24% year over year may seem a little slow for a tech company. But again, if a year ago they were priced, again, by these investment bankers, you can argue the value proposition of that. But again, it is their job to properly and appropriately price companies at $26, or what, like 6 times where we're at, and over 6 times where we're at right now. I think Root's at like a $2 billion. What's Root's market cap right now? So Root's market cap is at 1.5 billion. 1.5 times 6. We'll just round that up to 10. So Root was generally valued at about $10 billion when it IPO'd last October. And again, it's currently at 1.5 billion. And again, a 24% year over year is solid. 177 mil on revenue is solid. And again, just from an optics perspective, from a guy who used to gauge fair value before the market turned into a complete wasteland, not wasteland, but the Wild West where value really doesn't mean anything anymore. These are good numbers. These are good numbers. Although they're not profitable, these are good metrics, okay? In August, Root announced a partnership with Carvana, huge, to bundle insurance into the used car dealers' vehicle sales. This arrangement opens up a new market for Root that will require less market spending. CFO Dan Rosenthal called it a massive opportunity. So Carvana, you guys all know what that is. Massive company, very successful company at that. That's a big and very appropriate partnership, okay? So that's good. Again, there's a lot of things about Root that just make, aside from the short squeeze, which again, make it very clear before we dive into the charts, the short squeeze data and the short squeeze potential is, if this wasn't here, I wouldn't be trading Root. But it is, and this is the cherry on top, the fact that as a company itself, from a fundamental perspective, it's pretty appealing to me, okay? So that's that. Let's talk about Root. Again, as I mentioned in the newsletter, there we go. As I mentioned, this guy, we got the descending triangle that's in play, but descending triangles are usually bad, right? A descending triangle pattern, Royce, that's not a good pattern. It's a bearish pattern, but this is looking like it's shaping up to be a good old 2-wave pattern. So 2 waves, similar kind of to a bull flag. A bull flag, you guys know the bull flag, actually I would say is my second favorite pattern in the market, because a 2-wave pattern is my single favorite pattern in the market. But a bull flag is a parabolic move up followed by a descending triangle. This saw a parabolic move up, but the parabolic move up is part of that descending triangle. So what I've noticed, and this is kind of the 2-wave pattern that I've coined over the course of 2020 and 2021, when you see a stock rally, this only applies, the 2-wave pattern only applies to hype stocks. That's why I said in this morning's newsletter, actually, the waves fam thrives in times of hyper volatility, and that's why I like to see hype patterns. That's how a lot of you guys know. That's how I built my trading career, and the majority of my net worth is capitalizing on hype cycles and bubbles. And this is just something you see in so many hype cycles and so many bubbles, especially in this short squeeze sector, which has proven itself with last month SPRT, now GREE. By the way, GRE's market cap is at about $1 billion, so I just wanted to throw that out because I mentioned that in yesterday's video. But regardless, whatever company it is, you always, I'm not going to say always. Again, you guys, I'm just using historical data to establish what I feel to be the most rational conclusion, and that is that I've seen this a lot in playing these bubbles and playing hype cycles. You see a massive move to the upside, parabolic move up. What was this move right here? Let's get a quick price range on this. Just in the span of a couple of days, Root went up over 40%. So Root popped 40% in the span in a couple of days. I'd call that a parabolic move up. That is a hype rally. We're seeing volume. Love the volume we're seeing as compared to, Root's history. This is significantly more volume than we've ever seen for Root, which I also love to see, especially once again, when it comes to hype cycles, it's all about the amount of traders who are in there. And the fact that Root has a $1.5 billion market cap means that this is objectively a pretty small company, and it doesn't take much capital inflow to significantly appreciate the share price. And again, if people start buying, if the stock starts going up, if the shorts have to cover their asses and start buying shares to cover their short positions, that creates the snowball effect. That is the beautiful short squeeze. Okay, so again, I do think this objectively this is a descending triangle pattern historically. I mean, technically bullish, I guess, but I'm perceiving this because the base of this descending triangle, this angle right here, not the best geometry guy, but I'm not exactly sure what that wall is called right there. Anyway, you guys get the point. Parabolic move up forming the base, I'll call it, of this descending triangle does lead me to believe, on top of the fact, on all the other factors we've discussed, that this will play out as a two-wave pattern. It's good old coin two-wave pattern. And you guys know the drill. The second wave is always significantly greater than the first wave. That's why it is going to be a, that's why it is going to be a tsunami with a $S. Okay, it's all coming full circle. All right, anyway, when we're talking about upside, you guys, it's kind of hard to tell. I set upside price targets for like sprt, and we all know what went down there. But just using kind of this line of resistance, let's zoom out. So again, you guys see this isn't even like, this is such a young stock. It IPO'd once again not even a year ago at the end of October, okay? So, I mean, terrible IPO. Absolutely terrible IPO. Kind of reminiscent of what we saw yesterday in GREE. I guess that was more of a merger. But, I mean, on its NASDAQ debut, terrible performance. Absolutely fell off a cliff since then. Has obviously been in a very, very significant downtrend. But we can use that downtrend to create somewhat of a line of resistance on the long-term downtrend. Kickoff right here, first touch point at the IPO. Touch point here, creating the line of resistance on this long-term downtrend. Let's say we start popping off. We have about 2 weeks left. We are halfway through September. It's crazy. But October 1st, if we start to go parabolic, if the second wave comes in the fashion that I believe it will, that would take us to over $12 by October 1st, which from here is obviously over 2x. So again, let's hope we see it. As I said in the beginning, make it very clear, you guys know, but I feel like I have to say it sometimes because maybe some of you don't. I am a trader. All right, I'm an analyst, and I do my best to use historical data to establish the most rational and logical conclusion I can. And that's how I make trades, with asymmetric upside at the top of mind. I'm not a sorcerer, okay? I'm not a fortune teller. So this could absolutely not play out. I don't know. But always know, once again, you guys, my money's on it. Let me know in the comments down below if your money is on Root, if you got a baggie of Root, because as I also said in the newsletter, I'm irresponsibly bullish, and tomorrow we'll be telling. So I'll catch you guys downstairs in the comments. Also, the cherry on top for the newsletter and portfolio, you guys know Fridays are for the fam. I do not post updated videos on Fridays, but I do hop in the Discord. I do send out the newsletter. I actually put more time into the newsletter and stuff because I have more time to not make a video and stuff. But Fridays are for the Waves fam. And you also get the exclusive Sunday Stock Watch as well. Same Sunday Stock Watch, the same exact format. If you guys have been around, you know the Sunday Stock Watch videos look like. Same as all the other videos, but I now make that private on YouTube, and then I send out a private link to the newsletter group through an email newsletter just like this that allows you to go in there and comment and talk shop with me without all the freaking bots in the comments as well. Okay, so again, just cherry on top, first links, all the links are going to be down below, and I'll catch you guys downstairs in the comments below as well. Until next time, you guys, have a great weekend, take action, make waves, peace.